We usually invest based on potential returns. I mean, this is the first thing that we check when we start or we want to start investing in a certain product, correct? And even me, if I hear a return of maybe 45% or 50%, I usually want to get in right away in that particular fund. So we have talked about ETFs, and today we're going to be seeing if these ETFs are actually worth investing in. We are going to be breaking these using real data, and we want to see how they have actually performed over the years or over a period of time. They usually say that ETFs, they perform better than most managed funds and better than individual stocks. And we want to verify this today. So I'm going to be sharing a lot of charts, and not to worry because I will be explaining everything. And at the end of this video, you'll know exactly where you're putting your money into and whether you're going to be making some money through the ETFs if you choose to invest in them, okay? And if you have not watched the video that we did on what ETFs are, I would highly recommend that you watch that video first before you proceed to this video, because it's going to give you the basics and help you understand what ETFs are, and then after that you continue with this particular video, right? So welcome to Study of Wealth. My name is Susan Juguna, and here we talk all things money with a little bias into investing and of course building real financial freedom. If that sounds like something that you're interested in, make sure that you hit that subscribe button so that you can join our growing community. We are growing every day, and I'm very grateful for you guys because you keep me motivated, and I'm thankful for that. Now, in this video, I'll go through the past performance of different ETFs, and I'm going to start with the one that are in the local market, that is in Kenya, and then we are going to look at a few in the global market. Currently in Kenya, we have two ETFs that are available to us. One is very recent, it was launched this month, but the one that has been there for years, we're going to look at that, and we look at the past performance of this ETF, yes. And I'll show you some global ETFs that you can also choose or you can be able to access. And I'll make sure I simplify the charts and highlight what you should really pay attention to before you investing. Remember, we said that we will do three videos on ETFs. First, we did the basics, that is the definition, the benefits, and today we will look at the past performance and the potential of ETFs. Also, how much you need to start investing in each of the ETFs that I'll be listing here today. The third video that you're going to cover, which will come after this, that is part 3 of this series, we will look at how to invest in these ETFs, what you need, like the platforms, and then we are also going to discuss the risk of investing in ETFs so that we understand whether it is actually worth it. And onto that video, the last video that we'll cover, I'll also add the fees that you get to pay when you're investing in ETFs in both the global market and also in the local market, okay? Let me know if I am missing anything that you would like us to cover so that we make sure that these sessions are have everything that we need to know about ETFs, okay? Now, we start with the Kenyan ETF, and I want you to note that for the ETF that are listed in the NSE, Nairobi Securities Exchange, it can be a bit costly, okay? But the global ETFs are more affordable. So stick around because I'm going to show you how much you need to actually invest each of the ETFs that I'm going to be discussing. So currently we don't have many. We have two, as I have said earlier, and we are going to focus more on the Absa Gold ETF, okay? But for those who are curious about the newly launched ETF, this is called the Satrix MSCI World ETF. This ETF was launched on 16th July, yes? And one ETF is going for 761 Kenya shillings, and to invest in this ETF you'll need like 77,000 Kenya shillings so that you can be able to invest in 100 units. As I said, when investing in the Nairobi Securities Exchange, the minimum investment that you can make in the for stocks and also for ETFs is 100 units. So we multiply 100 with 761 Kenya shillings. It gives us around 76,100. We include the fees. We are looking at a maximum of 77,000. And I tried locating this ETF in my trading platform and I couldn't find it, but it's there in the NSE website, and I've seen a few apps you can actually buy this ETF from. I won't mention their names because I'm still trying to vet them and their customer service, so that when I'm recommending it, I'm sure of what I'm recommending for you guys, okay? I'm still trying to reach out to them. I tried calling them, they did pick my call, and I'm very big in customer service. I usually believe that if I call them and they're not receiving my calls and have not invested, what would happen if I wanted to reach them when I have already or they hold my money? So I usually make sure that I go through the customer service. I call them to just assess their customer service before I tell you who they are, okay? That being said, let's look at Absa Gold ETF. We said if you own this ETF, it's like you have invested in real gold, and the price of your ETF will move based on the price of gold, okay? So this is how you invest in precious metals when you are in Kenya, because sometimes it's very hard for us to actually buy precious metals, but through such an ETF you can actually invest in gold without necessarily having the physical gold. But remember, all the units for Absa Gold are backed by physical gold somewhere. So this ETF has been in the market since 2019. It started at a price of 1,474, and right now 1 unit goes at 3,900 Kenya shilling. That is a 164% change in 5 years. So if you invested the minimum unit at that particular time, that is in 2019, you invested the minimum amount, which is 100 units, you needed 148,000 Kenya shillings to invest. 5 years later, you'd be sitting on 390,000 Kenya shillings if you invested in this Absa Gold ETF. If you invested 1 year ago, you would have gotten a return of 36% in that 1 year. Currently, you need a minimum of 391,000 Kenya shillings to invest. And remember, I'm putting this on the higher side so that we can cater for the fees, that is the brokerage fees, okay? So those two are the available ETFs here in Kenya. And now we move to the offshores ETFs or global ETFs that you can actually invest in. We will look at the most popular ones, and then we're also going to look at one AI ETF. I know this is an area most people are very interested in, the AI and the AI and tech, I think, are the future forward options when it comes to ETFs, because that is where we are moving. So when choosing an ETF, we have different types. We have growth ETFs for capital growth. Then we have dividends ETFs for steady income, because you are receiving dividends. So we have ETFs that usually offer dividends, okay? And we are going to be discussing this further on our next video on ETFs, okay? Then we have sector ETFs. Sector ETFs, for these, you are investing in a specific industry. So if you're interested maybe in the AI industry, you go to the AI ETFs, all right? So here is a list of ETFs you can actually invest in, and you can invest in all these while you are in Kenya. In our next video, we'll discuss different platforms that you can actually utilize to invest in global ETFs while you're still in Kenya. These are the most popular ETFs that are known, okay? And we also, of course, we have more than these. and I have indicated their 1 year price changes, their current prices, although you can buy a fraction even worth 1,000 Kenya shillings. Then I have also included what each ETF contains, and as we said, ETFs are like smoothies which contain different individual stocks. So for the column where it says what it contains, it just shows what these ETFs carry, okay? So next, we go back to the purpose of this video. We are looking at historical performance of different ETFs. Yes, we are going to start with the most popular one, and maybe you have heard about this particular ETF, that is Vanguard S&P 500 ETF, and its ticker symbol is VOO, okay? So Vanguard was created in 2010, so it has been there since 2010, and as the name suggests, it invests, or it holds the top 500 companies or best performing companies in United States. And as you can see here, this ETF has done a 468% change, that is price increase, since 2010. And because I want to make this video very exciting for all of us, I would like us to look at a simulation of an investment so that you understand how this played out, or what you would have expected if you invested in this particular fund, okay? And you're going to be using different numbers. You're going to be using, if you invested 5,000 Kenya shillings, 10,000 Kenya shillings, 100,000 Kenya shillings, or if you invested 1 million Kenya shillings. And to make this easier, instead of doing the whole calculation of 468, we just do a multiplier. So for 468%, we're going to use a multiplier of 5.68. Yes, basically this is 468% plus 1, just to make sure that we are also including the initial investments. And for 5,000 Kenya shillings, we multiply that by 5.68. We're going to get 28,400. So after 15 years, this is the amount you would get. And I know I've not adjusted this for inflation as well as currency conversion. And because I don't want to complicate this, I want to just mention that if we adjusted for inflation and did the calculation for conversion, these figures would actually be higher, given that 2010, one US dollar was going for 76 Kenya shillings. And today it is going at 129 Kenya shillings. But for those who are curious, let me just attach this here so that you can see how this would have performed. So we adjust this for inflation, and also we include the currency conversion, okay? So for this table, this is for currency conversion. So first, when you're investing, you convert your money to US dollars. Yes, then after a period of time, we do a multiplier of 5.68, that is after 15 years. We first multiply our investment, that is for 5,000 Kenya shillings, we multiply that by 76. We get $65.79. We do a multiplier of 5.68 because those are the returns, and we get $373. So for today, because now we are converting this money back to Kenya shillings, we multiply that with 129, and we are going to get 48,210. And because money today is not the same as money 15 years ago, we are going to adjust this for inflation. When we adjust Vanguard S&P 500 returns in Kenya shillings, working with the average annual inflation rate from 2010 to 2025 was approximately 6.5%. Remember, this is estimation to see the potential of ETFs. They are not the exact figures. We are working with averages to just weigh how much you would expect in this particular investment. We adjust it for inflation, and we get the last column is what you would have in your account after investing what is in the first column, okay? I would love to hear from you based on this. After investing for 15 years, if you invested 1 million Kenya shillings, you'd be looking at 7 million in your account. Tell me in the comment section, do you think this amount is worth it to wait for 15 years, or do you think that it's actually something better you would put your money into. Okay, let me know in the comment section. Now we are going to go to other ETFs, but in our next ETFs we are not going to look at assimilation. We're just going to look at the historical performance so that you can see whether this is consistent or it's just for one ETF. And before we look at the next ETF, if you have been following this series on ETFs, on how to actually invest in ETFs, don't be a silent listener. Please comment capital growth or dividend ETFs or sector ETF based on your interest. What are you interested in? Which one would you go for, as we have discussed earlier? Make sure that you comment so that I can also assess the demand for this type of content around ETFs, and I'll continue going deeper on how to make money with ETFs. Now, let us look at another ETF, one from the AI sector. We're going to look at the Invesco QQQ ETF that tracks the Nasdaq 100 index. The Nasdaq 100 index is a tech-heavy index, and I have to say, AI, cloud, and semiconductor are driving explosive returns. So this ETF was launched in 2000, and since 25 years is a long time to look for or to assess the returns and determine how much you would expect. I would like us to focus on the last 5 years. So the ETF went up 121.87%, which is a very good return. And one thing to note in these ETFs is that they don't do very well in the short term. So you need to invest for long term, and you don't want to be timing the market, all right? You want to be buying consistently over time and grow your investment in these ETFs, because as you can see, the short-term returns are not so good, but when you look at the long-term returns, even 5 years and above, the returns are very good. Okay, that is something that I'm noting as we go on with our analysis. I hope you're noting that as well. Yeah, so we are looking at 5 years and above. If you're going for less than 5 years, then this might not be a very good investment for you. So next, we will look at an ETF in the AI sector. I included this because I believe this is where we are headed, and now with the rise of AI, this is the direction that we're taking, or most investments are taking. So for an investor, it's always good to have sectors that are doing very well currently. And I would say at the moment, AI has a very bright future. Okay, let me know in the comment section whether you think the same. So we look at the Global X Artificial Intelligence and Technology ETF. This ETF have been in the market since 2018, and as you can see here, it has performed well over the years. It has had a 197% change in 8 years, a 15% year change, and I'm glad I'm sharing this because it allows me to show you what we mean by long-term investments. And for example, as you can see here, in December 2021, the price was around $31, yes, and for the whole year of 2022, the price was below this. It was below $31, and we came back to that point in 2024. So in 2022, the market was going down. In 2023, it was trying to recover, and in 2024, it went back to the $31, and since then it has gone above the $31. So if you invested in 2021, the market went down, and in 2022 and 2023 your account would have read a smaller amount than what you invested. So if you stay long enough in that market, you're going to recover your money and make more if you stay long enough. So if you exited this market before 2024, then you made a loss in your investment. But if you stayed long enough for the market to recover, it took 2 years for it to recover, then it means that you made some profit. So when you're going in this kind of investments, make sure that you're putting money that you will not need in the near future, money that is for long-term investment. It is a long-term investment, and I hope this video was helpful. In our next video, we're going to look at how to invest in ETFs, what you need, and the risk involved. And as I mentioned, we're also going to cover the fees that you get to pay when investing in ETFs. So make sure that you stay tuned for that, and happy investing. Also, don't forget to watch this video on how I would invest 1 million Kenya shillings today here in Kenya. Thank you so much for watching. Bye. See you in our next video.